Okay, welcome back to another Integrity video. This week we're doing lions and tigers, and we're going to journalize, post, and prepare a trial balance, and we're in week 3. So last week we did the transaction analysis schedule that looks something like this, where we went through and analyzed each and every transaction. Now, if I was Microsoft, how effective do you think that this would be to keep track of all of my transactions? Most companies have more than transactions than they can keep through on this schedule, and doing financial statements would be difficult. So now this week we're going to learn the formal how we get this information in the ledgers, and the journals and the ledgers and the financial statements. Now you can take your information from last week and just journalize it, or you can walk yourself through it again. The more you practice, the better you are. So I'm going to walk through the transactions just again for more practice. So on October 25th, a 2-year lease was signed. Last week we talked about how this is not an economic event. And in order to have a journal entry, you have to have an economic event. So we do not need to make a journal entry for Part B. Or for Part A, I'm sorry. And then on B, on November 1st, Lions and Tigers deposits $20,000 in cash to its bank account. So we're going to start with a date, and that was on 11/1. So that's our date column. Then we're going to have a debit for cash. And we have a posting reference column, which we're going to leave blank, and then we're going to debit $20,000. Then every entry has an opposite entry that's a credit, so we are going to credit common stock for $20,000. Now, you could provide an explanation here explaining what happened, but I'm going to omit those for this practice. On 11/2, or entry C, they paid $500 cash to Redmond's property rental for November's rent. Now we remember that this is a reduction of equity, but we want to get specific accounts and add everything up in those specific accounts. So this is actually a rent expense. Expenses have normal debit balances, and we debit them to make them go up. We know cash is an asset, and it's going down, so we're going to credit cash. Please feel free to pause this as you go along. On D, on November 2nd, they pay. The minute I see pay, we know it's a credit to cash. I am going to debit equipment because I am buying second-hand grooming equipment. Notice I always list my debit first. So that's equipment of $1,800, and I always credit cash in this scenario because cash is going down. Notice I also indent my credit, so it's very clear to anyone looking at my entries what I'm doing. And then on E, I buy office equipment, and this time I sign a note. So I'm going to debit my equipment, just like in the transaction before. This time it was for $3,500. But I'm going to credit notes payable. Now this is where you would start to maybe have an explanation. I might want to put 12% 6-month note, just so when I went back to look at it I would know what the terms of the agreement are. But once again, for this assignment, don't worry about it. Okay, on F, on November 4th, they buy 1,000 in grooming supplies from the dog and pony, 500 in cash and 500 on account. Okay, so grooming supplies is an asset. It's going up. So I'm going to debit grooming supplies for 1,000. I'm going to credit cash for 500, and this is a compound entry. I also have to credit accounts payable, the dog and pony, etc., for 500 to make it balance. Now you could have put accounts payable first or second, as long as your debits are listed first and your credits are listed second. Okay? On G, the first employee was hired. There's no economic event here, so there's no entry. On H, they paid a janitorial service for the first initial cleaning. So on 11/15, we're going to debit cleaning expense for $350, and we're going to credit cash for $350. On November 19th, we're paying Carmen. So we're going to debit salary or wages expense. Our chart of accounts, I believe, called the salary expense for $125, and I'm going to pay with cash, so I'm going to credit cash. Now some students find it easier to figure out the cash first, and that's fine if there is cash, but always make sure you debit first and you credit second. On J, they pay $1,000 to Redmond's property rent for December and January's rent. Okay, they pay, so I know I'm going to credit cash, and then the problem tells me, hint, prepaid rent. So on 11/28, I'm going to debit prepaid rent for 1,000. And I'm going to credit cash for 1,000 because my cash went down. On 11/29, I collected $800 in cash. Finally, I get to debit cash because my cash is finally going up. So I'm going to credit cash of $800, and I'm going to debit cash of $800, and I'm going to credit grooming revenue of $800. And I should have made my columns a little bit wider. Sorry about that. And then finally, the last entry of the month, on 11/30, I perform services on account by grooming these animals. So I'm going to debit accounts receivable for $232, and I'm going to credit grooming revenue for $232. That is my journal entries. We call the journal the original book of entry. And what that means is that's where I record each economic event. But the problem is that doesn't help me sum up the events. So now what I need to do is I need to draw out my T accounts and post the T accounts. As I mentioned, you may also post to the ledger, but the T accounts is quick and dirty for the video. So the first step in doing the T accounts, and I'm going to do them right here on this same screen, is to actually draw out your T accounts and post to it. Now your cash T account is going to be your biggest because it's going to have the most events. Then you're going to have your accounts receivable, and then you're going to have your supplies, and then you're going to have your prepaid rent, your equipment, your notes payable, actually let's put notes payable here and accounts payable here so we can keep those liabilities together. Just want to keep these together like the chart of accounts would be. Then we're going to scroll down a little bit more, and we're going to have some grooming revenue. We're going to have some rent expense, some salary expense, and some cleaning expense. See if we can get this all on here. Now, the process of posting is pretty tedious. If we were posting for real, a computer system would be doing it for us. That's why I'm not as concerned with the general ledger. But I want you to see how the process works. So the process of posting is I take this number here and I put it in the appropriate account. So this is 20,000. If I was posting to the formal ledgers, I would put in Journal J1 for General Journal 1, and over here I would write in which account I posted to. That is my signature that I have posted. So that's really important that we understand that that's our signature, that I've done what I said I was going to do. Now I forgot to include common stock here, so let's just draw that in small. I'm going to write 20,000 here because I have to post the second half of this entry, and I'm going to come back here and this is my signature that I've posted. Then I'm going to have to debit rent expense, and rent expense was 500. And here's my signature that I've posted. Then cash had a credit of 500, and here's my signature that I've posted. Equipment has a debit of 18. Here's my signature that I have posted. This is a very tedious step, okay? But it's important to see how this all comes together. Notice I put it in to my T account or my ledger first, and I put in my signature second. You want to make sure you're following that process as well. I bought equipment for $3,500, and there's my posting reference. My notes payable is $3,500, and here's my posting references. And I'm getting these numbers from the chart of accounts that is posted under, in Angel. If you have any questions on that, let me know. Grooming supplies were 1,000. And this is 12123. So that's that account number. Now, I'm going to suggest you pause the video, finish these postings. I'm going to go ahead and finish them so the video doesn't get too long.